Welcome to Thursday Night Stock Charts Live. It is my privilege to be here. Thank you for stopping by, saying hello, and like, subscribe. First time I've remembered to do that in the first minute. I think this is the first time. So like, subscribe to the channel. Tutorials below. Check all the links below. Good stuff below. Free, what do we call it? Bob's 5 top favorite candlestick patterns. Free 5-part video. And it's really, really good stuff. Really, really good. Okay, so what we're going to talk about tonight, we have a lot to go over because this Federal Reserve meeting is one of those meetings that is a game changer. You're going to find that things that worked before ain't going to work so good anymore. What didn't work before is now stepping up to the plate, coming back to life, and it's going to be, my guess, a commodity-driven market moving forward. Why? Because the Federal Reserve yesterday sparked the flames of inflation. You may be saying, wait, whoa, slow it down there, cowboy. Fed Chair Powell, Bob, Fed Chair Powell, the distinguished chairman of the Federal Reserve of these United States, said yesterday the Fed funds target is higher than what it was last meeting. Yes, I concur. He also said that we're going to have maybe 1, 2, or perhaps even 3 more rate hikes in 2023. Yes, I concur. He said that. There's only one problem. The market doesn't believe him. Nobody believes him. Nobody believes the Federal Reserve. Case in point, let me share my screen. And I've said this time and time again, never, ever listen to what they say, always watch what they do. Where is that? Here we go. This is from 2020. The Fed will keep rates unchanged. This is from the Federal Reserve, posted by the venerable and highly credible New York Times, the pioneers, the old gray lady of news. New York Times, September 16, 2020. That's the European style of doing that. I hate that. But they are so distinguished and far beyond the American citizens, so they have to go European style with their date settings. Fed will keep rates unchanged until at least 2023. Then again, market wrap, same day. Fed sees interest rates near zero to the end of 2023. So here we find ourselves yet again at a tipping point. So the Federal Reserve is not going to be raising 3 times this year. Maybe once. I don't know. Maybe. I don't know. I doubt it. The market's saying no way. But what I do want to point out here is risk. What is risk telling us? How are we measuring risk? We're measuring risk today by the VIX. And remember, as I go over these charts, we have 1 trading day left to go, and I go over the weekly charts, right? So a lot can happen. It's not gospel that we're going to close out the week on a Thursday night the way, excuse me, let me backtrack. It's not gospel that we're going to close out a Friday night the way we looked on a Thursday night. So keep an open mind. We're just taking a pulse of how we're probably going to close out the week. So what I did here is I wanted to say, okay, how is the VIX competing against the triple Qs this week? How is it stacking up on a daily time frame and on a weekly time frame? Are we seeing some accumulation? Because the VIX was up today, along with the market. It's not supposed to be. The VIX is supposed to be down in an up market, but the VIX has been showing strength. So all I did was a ratio chart. VIX versus the Qs, which is outperforming. This is a daily chart. Can you believe that while the VIX was up today, about a percentage point? I know it pulled back off the highs. The VIX outperformed the triple Qs today. It gets better. When you take a look at the weekly chart of VIX versus the Qs, Doji star formation, a sign of indecision. If we close this way or better, higher in this ratio, there's a very good chance that next week we get a move up higher in the VIX and a move lower on the S&P 500. Now, what I want to go is intraday. I haven't looked at this yet. I want to see what it looks like on an intraday basis. Let's go 30 minute. Wow. Look at the VIX. Momentum is building relative to the Qs on VIX. Look at the setup. This is the close. So what outperformed into the close today? Because remember, it doesn't matter where a stock, an index, the commodities, the cost of a cupcake. It doesn't matter intraday. What matters is where you close, the quality of the close. So did the VIX close strong relative to the outperforming sector? You bet your bottom dollar it did. Did the Qs sell off the highs of the day? Yes, they did. So you're beginning to see some relative outperformance by the VIX. We haven't broken out yet. This is just conversation. There is no clear and defined trend. So take this with a grain of salt. For all I know, as I stated earlier, one trading day left to go. We can drop down tomorrow, and this is just poof, gone. When I do take it seriously is when I start taking a look at the 4-hour ratio chart and I say, okay, how are we looking here? How are we looking? And I'll get my crayon out. I'll draw some lines. I already see that I like RSI. And we do this. Play connect the dots. And look at this. We broke out. We broke out. Does it hold? We don't know. We're not that smart. But I'll tell you, if we begin to break out to new higher highs, you can bet we're going to be leaning more into the short side because we were adding to shorts on strength today. As NVIDIA rallied, what did we do? Added to shorts. When Qs were rallying into the day, what did we do? We added to shorts. We shorted the market on strength and being very, very overbought. We also added more to our Tesla short. We'll save this. We'll refer back to this. Set it and forget it. Now, another way that we're measuring not so much technicals per se, we're measuring sentiment, is that what we like to do is take a look at the bulls bear ratio chart. And you could see that from back here. Yeah, I got to update this. This is actually wrong. I need to turn these red. You could see that when we get these spikes in bullishness, the markets tend to begin to peter out. They could still move up higher, but then all of a sudden they do a nosedive. And nobody sees it coming unless you're watching the charts. Now, admittedly, when you see spikes down, well, you're going to get a rally. And sure enough, we were really overdue for a rally. And this reversion to the mean was well-deserved. It really was. So while I am bearish on the market, and even though I keep saying the market's going up, I'm bearish on the market. I still am not convinced that we're in a new bull market. I think that this is a bull trap. I think that this is a counter trend rally within a cyclical bull market within a secular bear market. And where we're at current is that we are spiking up and into prior resistance levels where in times past, up here I have the S&P 500. In times past, when we get these spikes, we get a correction. This was not a big correction. This was back in 2017. Back here, it was a little bit different. 2021, we continued higher. There was spiking bullishness, putting in lower highs. Then the market petered out, and then we went into a correction on the S&P 500. This is probably going to happen again. I think that we could still head higher here on bullishness driven by sector rotation, meaning money moving out of technology into industrials, transports, commodities. We're going to talk all about this in a little while when we go over the weekly chart. So stick around. So this is, if you're bullish on the market, this is not the time to initiate new positions longer term. That time was down here or down here, not up here. So we're far closer to the end of this bull run and due for a correction than at the beginning. And I'm not saying that we're going to crash or anything like that. I'm just saying that the market's very, very overbought. Take a look at Tesla sitting with RSI, what, 84? It's ridiculous. So this is what we're looking at in terms of concern about the market, along with valuations, folks. We have the Shiller PE ratio that is near 31. That's mind-bogglingly high. That's the second highest since we peaked out. I just mentioned it back in 2021 here on the S&P 500. Right here. We're not that far away. So can they keep driving this market up higher? Yes, they can. Is it going to be a bloodbath when it goes? Yes, it is. And when you take a look at catalysts, what's the pin? What's the pin that bursts the bubble? And I'm using bubble loosely right now, very, very loosely. I don't believe that we're in a bubble per se, except for a debt bubble. CPI came in reasonable as expected, but this is going to change now. This is all going to change. And I was talking about this CPI report back in April, when we started seeing energy prices come in and food prices come in. I said, watch out, because what you're going to see is inflation come down. And the numbers that we're looking at now in terms of inflation data, like CPI, PCE reports, and back in April, May, I said, forget them. That's looking in the rearview mirror. What you're looking at, and you were joining me here live when we went over the charts on Thursday nights in particular, taking a look at energy prices going down, food prices going down, and saying, okay, so next month's report on the headline, including food and energy, is probably going to be better than what they expect at current. And it has been. And we have dropped down measurably, but I believe now that this is about to reverse. Why? The Federal Reserve. The Federal Reserve did it yesterday. And we're going to talk about why in a moment. I have pictures. What else do we have here? Retail sales, a lot hotter than expected today. I'll talk to you about why they were hotter than expected in a moment. Look at this. Philadelphia Fed survey, negative 13.7, and that was better than expected. Industrial production, negative. They were expecting flat. We went negative. Now, initial jobless claims came out today, and here in purple is pre-pandemic levels. Look at the initial jobless claims as they've been spiking up dramatically above pre-pandemic levels. So these past 2 weeks, we have vastly outperformed, or unfortunately, I don't want to say outperformed, but we exceeded expectations for initial jobless claims. We certainly don't want to outperform on that, but the Federal Reserve wants that. That's what they want, and they're getting it. This is the reason why they're pausing, along with their concern about commercial real estate and its impact on the banks. They could really give a rat's you-know-what about the individual. They care more about the banks. They're buddies. They care about them. They swim in the same pond. They go to the same parties. They all hang out together over in Stad, in the Hamptons, blah, blah, blah. They all go in the same circuit. Forget about you. They are worried about their own purse strings. Simple as that. Initial jobless claims hit highest since October 2021 as Texas jobless count soars. Is this what you want to see as we enter a so-called new bull market? We're losing jobs. This is what you see at the beginning of a bear market, not in the beginning of a new bull market. Now, retail sales unexpectedly surged in May, led by autos and building materials. But the question is why? Why did they surge? Simple. Credit card debt keeps surging even as interest rates hit record high. The consumer is broke, dead. They have no money. The average consumer in the United States doesn't have $400 to put towards emergencies. Now, it has been higher back in 2020, but this is still very, very high relative to historical terms. And the banks, they're going to keep jacking up interest rates no matter what the Federal Reserve does, and they're going to tighten up credit. And once they tighten up credit, everything seizes up. Look at the average credit card interest rate, now above 20%. If you're out there and you're in debt, there is no greater investment, no better risk-free investment than to take that money that you have in your money market account or in your investment account, pay off your debt. It's 20% risk-free. Think about it. The other thing that's about to hit the economy are student loans. Student loan forgiveness is over. In the next month or two, they're going to have to start repaying those loans. What do you think is going to happen to retail sales? They're going to plummet because we have already seen, this is from Steph Pomboy on Twitter. I suggest you follow her. She puts out some really good stuff. This is from her. How is it not only how is this not the only thing people are talking about today? The weekly trend in same store sales is effing ugly. And remember, this is nominal. The picture is even effing uglier in the context of soaring credit card borrowing. This is same store sales. They are plummeting. Here is the stimmy checks. And they keep saying there's all this stimmy check money out there. I don't know what they're talking about. A lot of that was lost in the stock market and spent during the inflationary times. So we're seeing same store sales at the retailers decline dramatically. Maybe they'll bottom out with today's retail sales numbers. But as it stands right now, I believe this is off of her Bloomberg, and this is pretty real-time data as of 6/10. I didn't say hello to everybody. Let's stop for a moment. Let me take a breath. Corey, nat gas. We're going to go over nat gas in a moment. I was talking about natural gas with members, and I said that I subscribe to a CTA money flow program, very, very expensive. And natural gas, they've been net short, but they're reducing their short positions. And we expect that they're going to be net buyers soon. So natural gas, we're looking at as a potential long. In fact, on a weekly time frame, I believe that natural gas has already broken out on the week. We're bullish on natural gas, haven't been so for a while. We are yet again. Expect the machines to start buying. Why? It's a commodity. Inflation is back, folks. It's going to be higher next month. Sean, hello. Trader Isaac, hey, brother. Haven't seen you in a while. The lovely Jody, welcome. Franklin, welcome. Yeah, Rick, the dollar dropped today because, think about this for a moment. If the markets believed that the Federal Reserve was bullish and hawkish on fighting inflation, they're going to raise rates 1, maybe 3 times this year. So don't get used to this easy money stuff. We're not going to have none of that. Well, the dollar would have rallied. the dollar would have went up, but it didn't. It dropped like a rock. It was helped by the fact that the ECB raised by a quarter basis point, but pretty ugly stuff on a relative basis. The dollar was pretty ugly today, at least relative to the euro. So in all probability, it's going lower. Now, while the Federal Reserve wants you to believe, and I watched his presser last night, and he wants you to believe that, and he said this, he was very, very straight-faced and serious and sincere in a very fake way. He's saying, we're here for the American people. He's not here for the American people. He's here for the so-called elites. I like to call them parasites. He's here for them. The banks that were bailed out were called in front of Congress. And they were, and to her credit, what's her name out of Washington? Not Washington, Massachusetts. Pocahontas. What's her name? Elizabeth Warren. I had to say, bravo to Elizabeth Warren. When somebody I completely disagree with has a point, I have no problem saying, "Hey, good point." She grilled these banksters in front of Congress, these inept, these incompetent people that couldn't structure their debt out, thus resulting in a fracturing of their balance sheet, causing them to go poof. And she called him in front of Congress. She says, "Listen, you giving back any of your bonuses? You doing any of that?" No. We won't be doing that. No. There's no contrition, zero contrition. So they're doing this all for their bankster buddies. Have no doubt about it. Not for you and me. We bail out. We pay our taxes. And if we don't, we have 82,000 new IRS agents, armed no less, to come to our house to get us to take out our checkbook to cut them a check so that we could bail out these fraudsters with Harvard MBAs. So Fed emergency bank bailout facility usage hits record highs. Now, this is the facility that helps bail out banks overnight. So they have collateral overnight so that they can stay solvent. So it really spiked up back in March here, and it got drawn down. Excuse me, I'm looking at the wrong thing. It spiked up here. I'm not sure. Oh, rate of change. Okay, rate of change. Okay, yeah, it really spiked up here. The rate of change is very, very high. But now we're at highs considerably higher than where we were back in March. How are we supposed to believe that the banking crisis is over when these banks keep going to the Federal Reserve in real time, going to the Federal Reserve and saying, "Hey, hat in hand, can you keep us solvent overnight, please?" Because no other banks want to loan to them. And their depositors are fleeing. Now let's talk about, oh God. You know, I don't have a bachelor's degree. All right. I don't have one. I'm lucky I got out of high school. And, not for nothing. I do these live and I record them and I make them public for a reason, for record. And I would encourage you, if you're new, go back, check out my calls from a few months ago. See if I didn't predict what would happen with inflation coming down would happen. I did. Go back, check it out. So now that the Federal Reserve has paused on rate hikes, and to their own admission, the PCE inflation index, which is their favorite index at the core, ex food and energy, is pretty firm. It hasn't really gone anywhere. It's still pretty high, yet they've paused. So what does that mean? The dollar gets weaker. What is denominated in US dollars? Commodities. What do commodities go into? Everything. Everything. That means that everything you buy, from a loaf of bread to a paper clip, is going to go up higher. Don't believe me about the paper clip? Okay. How do we know? That CTA report that I get, the machines, the algorithmic buying, one too many A's. This is Alcoa Aluminum. Alcoa Aluminum. Alcoa Aluminum is a derivative play on the product, which we could trade. We're looking to buy Alcoa Aluminum. Why? The machines are beginning to buy. They were net short. Now they're beginning to buy aluminum. You could see here, monthly chart, W formation, getting ready for another leg higher. You want to drill down even further? Let's go to a daily chart. How did aluminum respond to the Federal Reserve's announcement? Down on the session, but on the week, up 2.10%. So this is a chart that's looking very, very firm. We're going to see a lot of this. Palladium, weekly chart, beaten over the head like you can't believe. What are the machines beginning to do? They're beginning to buy. What is Palladium doing? Inside bar. This could be a low. We're going to be watching to see whether or not we're going to get a continuation move up higher on Palladium. This is looking pretty good, breaking out of a long-term, let me retrace, threatening to break out of a long-term downtrend. It is still in a downtrend. So I wouldn't go running in tomorrow buying this with both feet. This is PALL. What else do we want to look at to see how the markets reacted to the Federal Reserve and why we believe that inflation is going to come back with a vengeance? Look no further than the DBC. This is the Invesco DB Commodity Tracking Index. It was up over 2% today. Look at this move up higher. You want more evidence? DBB. This is the base metals fund. Aluminum rallied today and rallied on the week, no less, because everybody knew what the Federal Reserve was going to do. On the week, we're up 2.2%. On the month, nearly 5%. And this is still in a bear market. So these are just a couple of examples. We're going to go to more in a moment as we go over the weekly charts. But folks, we have a bit of a problem on our hands here with inflation. It's threatening to come back. And if we continue to see weak economic data, jobless claims rise, non-farm payrolls decline. I'm not even going to go into non-farm payrolls, that ridiculous number they put out. And inflation rise, we're going to have a very, very serious problem in this economy. Very, very serious. So, because the Federal Reserve has got to decide, do I save the consumer or do I save the banks? And as it stands right now, they have chosen the banks. Weekly chart of the yield curve. We are still down on the week, one trading day left to go, but we are off the lows of the week. The yield curve is still majorly inverted. This is the bond market saying there's something very, very wrong with the economy. Very, very wrong. And it's not going to end well. Bond yields. If the bond market was saying, okay, boy, we have a real hawkish Federal Reserve here, bond yields would have been up on the week. They are now down on the week. Whereas bond prices are going to move up higher. And I had to struggle with this one for the why about it, because we do have some TLT. And this is the TLT, 20-year bond ETF. I'm going to go to the daily chart. This is very close to a breakout on a daily time frame. So you got to take a step back and you got to riddle yourself this question. Why would bonds rally when they just passed the debt ceiling bill guaranteeing minimum $4 trillion in additional spending, like really quick. Why would that happen? And why would yields drop when we're going to add more debt? Doesn't supply require more interest rate because you have less demand? It makes sense. But why would that happen? Why would it happen? Well, I got to take you back to this for a moment because I skipped this. This is the Federal Reserve's balance sheet. Now, while it didn't move up dramatically, this is probably the smallest move I've seen since March back here. Very, very small move over the past couple of weeks. And this appears ready to put in a higher low and hook back up. Now, back to the question, who's buying all this debt? You are. The Federal Reserve is going to buy $4 trillion worth of more debt minimum. That page is going to begin to move up higher yet again, allowing for bonds to rally, yields to drop, to try to keep the party alive so the regional banks don't go bankrupt. And the commercial real estate market, I forgot about them because their vacancy rates are through the roof with jobless claims. Think about this. Occupancy rates are through the roof. Lots of supply out there. Add to that, job losses are increasing. So what does that mean for occupancy rates? They go like this. So what happens to the commercial real estate sector? Those loans that need to get renewed, they're going to take the keys, they're going to hand them to the bank and say, we're out of here. It's your problem now. As for the dollar is now down nearly a percentage point on the week. If it breaks back down below, let's call it 101, it's all over for the dollar for a long, long time. This is just another dead cat bounce resulting in a new lower low. The dollar will go a lot lower. Again, what currency, for now anyway, are commodities denominated in? The US dollar still. What did well today? Euro, on the week anyway, too. They raised interest rates. Yen, there's not much hope for the Japanese. Volatility, we've gone over. Despite the fact that equities are up on the week, VIX should be down. One trading day left to go. Maybe it will be. But the VIX is up. So what does that tell us? What does that tell us when we have the VIX up along with the S&P 500? Well, my interpretation is a pretty simple one. Today, you had VIX up along with spiders up 1.24%. VIX up nearly 4.5%. VIX vastly outperforming the S&P 500 and the triple Qs. So how we interpret this is that you're an institutional trader. You have a book of business. Maybe you have an algorithm, and the machines are 100% long of the S&P 500, NDX, Dow Jones Industrial Average, the whatever, long of what's ever run. You're going to want some insurance on that position because you want to let that book ride until the algorithm senses that momentum is changing, and then they begin to sell. And then that volatility begins to pick up, and now you're long of volatility as well while you're dumping all of your long positions. And that is what's about to hit the markets, is that while we're not seeing the machines continuing to buy the Qs, continuing to buy the NASDAQ, continuing to buy the S&P 500, the amateur investor is still buying. So they will bleed them dry to their last nickel as they throw all their money at this market. And then one day we're going to get a big move up higher, a bearish reversal, and then you get the selling. And if you've been trading for more than 3 years, you know what 2020 looked like. And the excitement in February of 2020, right before the drop, was insane. Now, I mentioned earlier that I expected a broadening out of the rally. I've said this for the past several weeks. Transport's up over 4.33%. Dow Jones Industrial Average. These are all laggards relative to the technology sector. Up 1.5% on the week. Even the S&P 500 was a laggard relative to the Qs, but now is kind of overbought, up 3% on the week. These are major, major moves. The rate of change in this market is unsustainable. Now, when we start taking a look at the volume on the day, beautiful day, right? Beautiful day on the S&P 500. Look at this powerful candlestick. Look at this. We have RSI. RSI on the spiders is at 77. Let's take a walk down memory lane. When was the last time we saw this? Because it's not on this chart. I have to go back. Let's go back 2 years. The last time we saw anything like this was back in 2021. November of 2021, we hit a high on S&P 500, 78.49 on RSI. What do we do soon thereafter? We rolled over, then we rallied back. My guess, light volume. Yes, light volume. Here we are. Light volume rally back. And then, well, everybody's thinking that all is right with the world. You wake up and you get one of these mind-boggling new higher highs. But by the end of business that day, a bloody bloodbath, and then we sold off big time. So the test is always at the top. Beware of where we're at, folks, when you're deciding upon how much risk you want to put on the table. We at Current are betting against this market having a much longer move up higher. It could move up higher tomorrow. I wouldn't be the least bit surprised. But we are leaning into the short side in anticipation of a sell-off in the market. Volume today was pretty good. I will say that. Volume was very good. As for the Qs, weekly chart, the Qs are up nearly 4.5% on the week. We do have resistance above at 375. We closed at 370.26. So could tomorrow be the day where they gap it up higher, up and into 375, and then we get that reversal day? Sure. There's a lot of sellers up there. Daily view Qs. RSI on the triple Qs is now 79.09. So the analogy I usually draw when I talk about these charts being so overbought, the analogy I use is Wile E. Coyote, right? For the younger generation out there, just Google Wile E. Coyote running off of a cliff, beep, beep. And this is where we're at. You have everybody with a couple of $1,000 in their brokerage account, buying call options, driving the market up higher, and they're doing so at nosebleed levels, Wile E. Coyote levels. And we have to go back again, my guess is to 2021, to identify the last time we were at these overbought levels to appreciate where we're at. And we're right there. We hit a high back in November of 2021 at 80.23. We closed out the day on RSI 79.09. We are a blip away from those levels. And I would argue we are more extended now than we were back then. What else do we want to take a look at? I want to talk about some of the leaders out there. that we are shorting. Let's take a look at Tesla. Ugh. Don't blame the software. Blame the fat fingers. I have skinny fingers too. I can't even blame it on fat fingers. Tesla, RSI 84.88. We've been shorting Tesla because I believe that we are very close to a top here and that we are going to break very, very soon. Other names that we are shorting. We shorted the Qs today. We already went over that. We are short of NVIDIA, added more today on NVIDIA. And what I want to point out here on NVIDIA, in fact, let's go to my saved chart. NVIDIA is a strange animal. It was down today. What I want to point out about NVIDIA is this, is that while RSI was above 80 not too long ago, here, and we have put in new higher highs, RSI is diverging. It is not confirming the move up higher yet. Now, you could argue this was just a pressure valve release. Okay, I'll buy that. But what I'm going to be looking for is this on RSI. Do we break to new lower lows on RSI? Because if we do, you had better bet that we are retracing on NVIDIA. Is NVIDIA going to crash? No, NVIDIA is not going to crash. But we're looking to scalp a profit off of NVIDIA. That is my cord, which just fell out of the wall. There we go. Sorry about that, folks. And these stochastics are just at nosebleed levels. We're also short of Chipotle Mexican Grill. And I want to point out something about Chipotle Mexican Grill is that it had broken down last week and it was threatening. Here, I'll show you the weekly chart. It broke down last week and I warned members, listen, they're going to try to rally this and in an effort to try to recapture prior support. I believe it's going to fail, which is why we stayed short into that rally. Now, today what happened was that Chipotle, I had this chart up a couple of times today. I was worried about a breakout here because what was support back here has now become resistance. And I was happy to see that we closed pretty weak today, closing down just shy of a half percentage point. I would be a lot more comfortable with this trade on a breakdown to 2014. Our price target here is 1970 to 1950 on Chipotle Mexican Grill. It all depends on if the markets roll over along with it. So those are our shorts as of right now. Now, we were talking a little bit about natural gas earlier. I want to continue on this inflation topic for a moment because names like Boyle, this is a weekly breakout. This is very volatile. If you don't like volatility, buy UNG. But the machines are beginning to, let me go to the screen. What are the machines doing here? Natural gas. Currently, they are long 35% with a target of 100% short term, only 15% long on a longer term basis. So they have a lot more buying to do to become fully invested in natural gas. So we're looking for a breakout here above this upper band of resistance on Boyle, natural gas, and we'll perhaps look to put on a trade. Members, of course, will be sending out an alert. What else happened today? Due to the venerable Jay Powell and his promise to be hawkish for Kingdom Come. Well, gasoline prices are having their best week in a couple, up 1.77%. Daily view, the day immediately following the announcement of his hawkish policy. Gasoline spiked today 3.5%. So this goes back to what I was saying earlier. The CPI of this week meant nothing. It means zero. It's history. Do not focus on it. What these numbers represent right here, right now in June, will show up in the July CPI report if these rallies continue. Maybe I'm going to be wrong. Maybe they pull back. Maybe the venerable chairman is right, and he will be hawkish on inflation, and commodities will fall apart, and they will be afraid of him and his words. I don't think so, because history has never shown us that. So gasoline breaking out. What else does not believe the Fed chairman? Crude oil prices. They were down. They are now up on the week over a half percentage point, and on the day, they were up nearly 3.5%. Now, crude oil, they're still short, but not as short as they were, both long and short term. The machines. Gold. Now, gold, they were selling gold. The machines were selling gold. They are now buyers of gold, 35% long on their short-term portfolios. And on their longer-term portfolios, they are accumulating at current with only 15% exposure. What is gold doing? Threatening a breakout on a weekly time frame, on a daily time frame. Gold was down $25 at the open. By the end of business, bullish reversal bar. This is a probable bottom for gold. As for the mining stocks, they are holding weekly support. I'm not ready to buy here yet. I'm not ready to buy the mining stocks quite yet. I mean, Nugget, and before I leave this chart, the why behind it, I don't like buying, especially the mining stocks, when stochastics are below 50 and declining. Daily chart, I need to see a breakout here. I need to see a breakout. And how was volume today? Volume was not great. So we're cautious on the mining stocks. Gold a little bit more bullish. Silver a little bit more bullish. Let's do some chart requests. Jody, yeah, you make a very, very valid point. So let's talk about that for a moment. So the machines, the algorithms, they're momentum machines. So the word that you used is trend stock is the same thing, momentum, right? It's rising on momentum. That's the trend. So the machines are programmed to buy when there's blood in the streets, and when they see more institutional buyers move into the market, smart money, then they begin to buy aggressively, and they just churn the market up higher. The stronger the market gets, the more they buy until they're maxed out and they don't buy anymore, and they just enjoy the rocket ship ride up higher. That's where we're at right now. We're looking for crescendo in the market. And what you're seeing right now is the amateur guy coming in off of the bench, and the Wall Street calls it the stupid bench. I don't like to say that because I think it's rude, and a lot of my viewers are amateur investors, so it's insulting to them. I'm not going to say that. I'm going to say the amateur bench. You shouldn't be buying here in your. I wouldn't say 401k. You could speculate long, fine, but get ready to pull the ripcord and get out. Adobe after earnings, RBLX seasonality. LABU expected to run more. Yeah, I still like LABU. When is it? Adobe earnings? Aren't they late in the quarter? Weren't they just recently? They're not coming up, right? They're like in August, I believe. Can you confirm that, Donnie? I want to make sure that everybody's aware of when earnings are, since you brought it up. Where's my pen? What happened to my pen? Here we go. Okay. So, Donnie, Adobe. RBLX. Donnie's a member, so he gets as many as he wants. LABULCID. Donnie, you're making me work, man. So their earnings were today. Thank you. Gotcha. We're going to go over that chart because they were already running big time. Let's bring it up right now out of curiosity. They were running big time. RSI 81.38. They were up on volume. Very good price action here. All right, we'll go over in greater detail in a moment. We'll go over Intel. Intel's an interesting one. I've been hearing a lot of chatter about it, and I haven't heard chatter about Intel since 2020. How about TSLQ? Is that the short ETF for Tesla? We'll bring it up. Pakistan and Russia did a big oil deal in Wuhan this week. Yeah, it's going to take a while, but little by little, we did it to ourselves. You know, when in February of 22, when we weaponized the dollar and seized the Russian assets, I said it back then. We sowed the seeds for our own demise, and sure enough, NY Jets, hello. And I know you're not referring to me, Super Genius. Haven't seen you in a while. How you been, pal? We did not gas. I think we got everything. Let's do some chart requests. Let's do it. Folks, you're going to be using TrendSpider Automated Technical Analysis. 35% discount code below. Let's change this to one screen. You got it. AMD for Jody. Thanks, Sean. Okay. Let's go with in sequence so I don't forget anybody. Adobe. Now, Adobe weekly chart. Look at the volume here. Wow. I think that we're heading up here on Adobe. 505 per share. But then watch out. The reason you need to watch out is because on a daily chart, as I mentioned earlier, we have RSI above 80. I mean, this is an S&P 500 stock. If you're a mid-cap stock or a small-cap stock, you could stay above 80. You can go up to 90 on RSI. But when you're an S&P 500 stock, you need a lot of buyers out there to keep that stock aloft. So Adobe, I think, can move up higher. In fact, we broke out today on a daily chart. We're probably coming up here at 505.78, but I think that you need to lighten up into that and start considering doing some bear operations on Adobe. Let's go back to where we have resistance historically to a monthly chart. We're above resistance from back in May of 2001. $505 again. So I think you're going to have problems once you get up to 505 on Adobe. So be careful up at that level. I would be right now shopping for a short on it rather than looking to be long. RBLX, Robolox. I think we went over this a couple of days ago. Monthly chart, okay, off the lows of the week. That's a month. That's good. Weekly view. Good week so far, no breakout. Rising RSI. Love that. Higher lows. And you also have a new higher high. So what does that tell you? Momentum is beginning to build to the upside. Daily chart. Resistance above, but we did see a breakout today. RSI rising. Good stuff here. RBLX looking good. LABU, of which we are long. Monthly chart. At resistance. Weekly view. We have a breakout. We broke out actually last week, but we have a lot of overhead supply here. And this is why I haven't been adding to positions. You have resistance actually up here at 1128. Below that at 910. Daily view. We broke out today. So I'm liking this. We may be adding more to positions here. I would have liked to have seen more volume today. LCID, Lucid. Weekly view. A laggard. We're up. No new weekly lower low, which is the key to stop going down. This volume shelf at $6.10. Critical support. I would put my stop right below there if you're looking to get long. This is definitely not a short. Today, a good day. Close to an outside reversal bar. We gave up some gains. Don't like that. RSI building steam. We're very close to a breakout. Daily time frame on Lucid Group. Bullish. Intel. I can't tell you the last time I went over a chart of Intel. Intel has a breakout monthly time frame. Last month's volume was very, very good. This month's volume is on par to meet or exceed last month's. Weekly chart, strong week, powerful week. I see resistance here at $37 per share. If we get through that, I think we're coming up here to $40 a share. Daily view. We have resistance immediately above. You can see a fade off of the highs. These are the automated trend lines, folks. Click of a button. So be careful. You have resistance up at $37 per share. So be careful. Very toppy market. TSLQ. I wouldn't buy it. I'm short of Tesla, and I wouldn't buy it. I don't like these leveraged ETFs that much. I would sell puts. If it's optionable, I would sell puts. I wouldn't be a buyer here. My worry with these products is that I'll tell you a quick story. There was a volatility ETF called, I think it was symbol was TXIV, I believe. And I bought this thing. I thought the market was going to go down. Market goes down. Excuse me. Yeah, the market goes down. That product goes down too. VIX goes up. That product goes down. Time decay. So I worry about that with these products because Tesla did not have a wonderful day today. Let's bring it up. It was down on the day. This is a perfect example. Tesla was down on the day, and so was this product. So I would rather just short Tesla. If you don't have the capital, that's fine. I would rather just buy a debit spread, a put spread, and pretty much guaranteed that you're going to get a correlation between the two. This would drive me bananas. With Tesla being down today and this being down as well, I would fly off a wall. So, and I've been here, so I would avoid this. I don't like it. AMD. Resistance for Jody. Resistance alert 130.71. We've already hit it. We got stopped there last month. Be careful. We're down on the week. Underperforming the market is a laggard. Down on the day. Underperforming the market with resistance above. I would avoid this, especially with the triple Qs being so overbought. So I would avoid. And with that, folks, I'm going to say good night to everybody. Like, subscribe. Don't forget 14-day free trial offer. I've been doing a market wrap and sending out clips of market wrap. So make sure you subscribe to the channel to get the clips, and you get a feel for what we talk about on market wrap. If you decide, hey, listen, I'm really interested in this. This is good stuff. It's helped me out. Then you subscribe. 14-day free trial offer. Everybody have a profitable trading day tomorrow and have an awesome weekend. Happy Father's Day to everyone. Be well. You're welcome, Jody. Donnie, be well. Talk to you tomorrow. Oh, Dan, you sent me a couple of messages on YouTube. Thank you. If natural gas runs the furnaces that smell, yeah, there you go. Bam. Outstanding observation. Love it. Very smart audience. Guys, have a good, awesome night. I'll talk to you soon.